Hello, good weekend to all. It's Adil bringing you a review of the German DAX from an intermarket analysis perspective. Okay, let's see what's happening here. Okay, folks, so last week was an absolute shocker for me. Very poor week for me. Again, back to back. Last time minus 75, this time minus 200. So not a good week. Very hard for me to read. The markets were very volatile. I attempted to short the market, got caught in this short squeeze here, and obviously the market reversed powerfully in the opposite direction. So okay, let's try and see exactly what's happening here, because this may well be my first losing month in a long time. Okay, so let's see if we can decipher, and hopefully a better week next week, hopefully, fingers crossed. And really at the end of the day, it's our job to do our analysis, and obviously have to trade accordingly. So let me see if I can decipher exactly what's going on here, and obviously the volatility in the markets just moving concertedly in one direction rather than the other. Okay, so basically we had the 200 MA. I expected a potential bounce to hit the upper channel. Obviously that didn't transpire. The market continued to go down, even with stronger Chinese data in Asian markets higher overnight. So very strange. Okay, so let's see what's happening here. So at present, obviously, we were in this bearish channel, quite a emotive break. Let's just have a look at it from a fundamental perspective. Okay, so weekly chart, as you can see, the market's broken. We have come back now, and we are testing this potential support level here. Where are we? Here we are. Okay, so this is a support level that we have here on a weekly basis. Okay, so we smashed through the 50 MA as well, so I expected some sort of support around the 50, but obviously we failed to hold that, so which is a shame. But nevertheless, the market is certainly into a free fall. Okay, so yep, Russian sanctions. Okay, you can certainly cite that as an argument, but German DAX has been ignoring that for a long time with regards to Russian sanctions. So a lot of that you could argue was certainly priced into the market itself. Then even the sanctions themselves are not as harsh as everybody else is making them out to be, and them sanctions can be lifted at any time if obviously Russia falls back in line. But nevertheless, it certainly is a catalyst. I mean, if you look at it from a fundamental perspective, one can certainly argue that yes, it is a catalyst for the markets to obviously flush lower and move lower with conviction. Okay, so basically, what do we have here? So we have the German DAX obviously into support here, this support level region around the 9200. So that's basically where we are. Even though, I mean, you can certainly argue Argentinian debt crisis, the Portuguese bank crisis. You can argue the tapering because the employment cost index obviously is rising. That's an argument that people have made, etc., etc., etc. But all those arguments were laid to rest when the jobs data came out on Friday. Okay, so when the jobs data came out on Friday, then the argument for the Fed to raise rates and for Yellen to be cautious certainly helped, and that obviously helped the Aussie and the Kiwi bounce, helped the Euro bounce, and helped the actual dollar actually reverse in the opposite direction. Now if you look at the UUP, let's just bring up a chart of the UUP and show you. Okay, the UUP, even though Mr. Plosser did come out with some pro-dollar statements, the economic data didn't justify that, and that caused a reversal in the opposite direction. So as you can see, the US dollar was down given the economic data that came out. The economic data that came out on the Friday. Let's just have a look. So the German DAX suffers worst week in 2 years. Yes, that certainly is true. Pound drops to 7-week low. Yes, that's certainly true as well. Here we go. This is the key. I think this is the key article this is basically what the individuals are focusing on. Obviously, yes, they are focusing on Portuguese bank crisis, the Argentinian situation, the Russian situation, but one can argue that all that's factored in and baked into the cake now. The US economy is still suffering from the wages of emission. Worker wages, that is the increase in how much an average worker earns each hour, has been flat for the past 2 years despite a sharp upturn in hiring and a plunging unemployment rate. Okay, so this is what Ms. Yellen is focusing on. Okay, stagnant wages are acting as a brake on the economy and preventing it from growing much faster. The US has averaged 2% growth, well below its historic average of 3.2. Without fatter increases in wages, the economy is unlikely to expand more rapidly. So that's the argument. Okay, so she wants an increase in real wages. Okay, that obviously allows individuals then to certainly or gets the consumption cycle going and gets the economy kicking back into steam. So 12-month increase in wages of July was 2%. So this was the labour slack that she was referring to. And obviously, if she's referring to that, that means she's dovish. If she's dovish, that means easy monetary policy. If easy monetary policy, it doesn't matter about geopolitics. It doesn't matter about socioeconomics. The stock market is going to short squeeze higher. Some economists suspect the new jobs being created divided mainly into those that pay very well and those that pay poorly. That might account for the slow increase in wages despite a big pickup in hiring. So either way, jobs data weak. Obviously, rise in average hourly earnings still weak. Okay, so there our wages still weak. So therefore, dovish markets go higher. Okay, and given the fact that the markets have been sold off quite substantially already, I was expecting a short squeeze, which unfortunately didn't transpire. And that's one of the reasons why the start of the week I was up 100 and something points. And then midweek, obviously, when this carnage occurred, I ended up being by minus 200. So either way, that's part of trading. Losses are part of trading. You have to accept that, and you have to keep going and honour your stops and reanalyze the market and start again. Okay, so where are we now then? So if I just bring up my economic calendar and see if we can get everything in line. I mean, you can observe all the economic data that's come out for the week and reanalyze. Okay, so from a European perspective, okay, so you had the PMIs in France. PMI data in France came out better than expected. The German manufacturing index and came out slightly lower. European slightly lower. HSBC data came out higher on a Thursday into a Friday, so that should have propelled markets higher but failed to do so. And then we've got German employment. Obviously that was lower on a Thursday, and retail sales were actually better on a Thursday. So there's been mixed data overall. One can argue yes, certainly negative, but then the euro has been falling in accordance with that. So the argument from my perspective was the fact that we were going to hold a 50 and bounce. Why? Because a weaker economic data supports the view that the ECB will do QE. A weaker euro obviously helps exports, and that causes the markets to move higher, because that's what the eurozone has been wanting. A weaker euro, and obviously that's transpired now, so that should certainly propel the market higher. So from my perspective, this 9200 level will be solid support. That's basically what we're looking at. Obviously, if that breaches, and the next level of support is going to be 9000. But 9,200, 9,000 certainly should hold going into next week. Okay. Daily chart, as you can see, 9,200. Well, 9,170 to be precise. Will certainly hold. Looking for that to hold. Obviously, if that breaches, the next level is 9,070. Then obviously 9,000. So so I expect that level to certainly. I expect a bounce from that level tomorrow, or a level on Monday, and looking for the markets to certainly propel higher. That's basically what my positioning will be in accordance with that. Okay, so let's have a look at the smaller time frame, see if we can pick up anything at all. Smaller time frames, nothing here whatsoever, to be honest with you. Everything seems to be broken here at the moment. The only thing that I can argue at present is that we do have a potential double bottom scenario. If you look at a 10-minute chart, as you can see, again, double bottom scenario. You have an unfilled gap above, so that should act as a magnet. You've got a gap there, and then you've got a gap up here, and that's basically what we're looking for with regards to that. So if this double bottom holds here, then everything bodes well, and this market is certainly looking to set to rally and propel higher. So yes, provide the double bottom holds. Okay, so this is basically where we are at with regards to that. Okay, here we go. Okay, so that's basically where we are. Right, I understand. Now the German markets, what I generally tend to do is I observe the German markets with the US markets and see exactly what's happening with regards to the US markets, and that justifies whether or not the German DAX will rise. The main one I observe is the Nasdaq, but I do look at the pairs as well. So if I just have a quick run over with regard to the Euro stocks. Euro stocks 10-minute double bottom, so therefore that supports the view the German DAX is about to rise. Jump to 60 minutes double bottom as well. Look at a daily chart. Daily chart, you've got this key trend line support, so this supports the view that the German DAX is expecting a bounce come Monday. Okay, the HNS formation has been hit, has been triggered, although there is another HNS within the HNS, but either way, looking for a potential move higher come Monday. Okay folks, that's basically my bias for the German DAX and the European obviously stock markets. Now let's just confirm that with the CAC as well. CAC, you can see, hasn't even hit double bottom, has hit a higher low because the PMI data came out better than expected, and as you can see here, we are looking at potential support, as you can see there, or double bottom or triple bottom here. Horizontal support is certainly held. The HNS target has been hit on the French CAC, therefore I expect a move higher folks. Okay, that's basically what I'll be looking for. Right, okay, so the German CAC, the French CAC, the Euro stocks have confirmed, and yeah, we can certainly look at other indices as well. You can see there the IBEX double bottom, horizontal support. The PSI is a bit of a tricky one. That's the one, that's the Portuguese, obviously the bank, the French, the bank itself is causing chaos there. But at the moment, you can certainly argue that there was a potential trend line, but that has breached. So we are into free fall there. So that's something that will be of a major concern for me, and we'll see exactly how that transpires. For now, FTSE MIB, again we're into the 200 MA, so we are into support for the FTSE MIB as well. So multiple areas of support. Okay, so I am looking for a nice bounce come Monday, especially in the German DAX, and that's my reasoning for now. Obviously that will be subject to US market stabilizing and obviously Asian market stabilizing overnight. I need to see a movement in risk FX to confirm, commodities to confirm, obviously the bond market as well, based on Mr. J. Murphy's theory of intermarket analysis. Okay folks, so risk on, risk off, wax on, wax off. I've put forth my argument from a technical intermarket analysis perspective. I'll also be making a FTSE video shortly and a US markets video, and that should obviously support my view further for a potential bounce coming into next week. Okay, obviously that's subject to geopolitics, so if we can get a ceasefire over the weekend in Palestine, a ceasefire in Russia, Ukraine, and overall calm in the markets. Okay, Argentinian solution, we can get a solution with regards to the Portuguese bank, any type of good news that will create a catalyst for a short squeeze. Okay folks, so risk on, risk off, wax on, wax off. Goodbye.